just yesterday, and we are starting with an open session to tell you what you can study from the point of view of the exam when it comes to the budget. So this session would be useful not only for RBI Grade B students, but also students who are preparing for civil services, UPSC, SSC, and banking exams. The session would be taken by Meheka from News Canvas, and I would just like you to participate in the session as much as you can by typing in and sharing your feedback. Meheka, we can get started now.
Yes. Hello friends, welcome to our first session, which is an open session. This session we are going to discuss a lot about budget and what are the basics of budget, how you look at a budget, and what are the important things from your examination perspective that you need to study from the budget. Before I go ahead, just a quick take. Please use the chat tab over here and do not use the Q&A tab, as we will not be looking at the Q&A tab to answer any queries. So we please request you all to use the chat box and keep sending in your queries and responses on the chat box. So whatever questions I ask, I would love to hear it from all of you all in the chat box. Okay, so please use the chat box. Now, let me get, yeah. Okay. Let me just a second, guys. I think there's a noise, and let me just figure out how to. Let me just. Okay. So now let's just start the session, and let's start with something called as the basics of budget. So when I say the basics of budget, I need you all to understand some basic terminologies that is related to the budget, Union Budget of India, because this is where the foundation and base of a budget is. So, let's understand it in a very simple way. When I say budget, it is as simple as any budget that you as an individual prepares for yourself. So when I make a budget for myself, what I do? Okay, come on. Let me open the chat box for you all to write in your views. When you prepare a budget for yourself, what do you do in that? Come on, guys. You can keep your chat box to all participants and start throwing in what you feel about a budget. It's as simple as making your own budget. Come on. At least some of you all can try. Exactly. Good. Like some of you all have responded, guys. Just keep your send option to all participants so that everyone can look at your answers, and you all have mostly got it right. It's about your income and your expenses. So from the budget that you try to prepare, what you try to do is list down all the possible sources of your income, and then list down all possible sources of your expenditure. So what you try to do, I have 100 rupees. If my income for this year is going to be 100 rupees, then what do I do? I spend it, and I spend it wisely. And in that spending, I list out all the expenditure that I can do in a particular year and keep some amount for savings as well. And what if there is no saving and there is more expenditure that is budgeted for me than what I'm going to earn? I'll keep that for borrowings, right? You will keep that for borrowings. Now, similar is a budget that is being prepared by the government of India. So we do it at a small scale. Government of India does it for the entire nation. So when they try to do it for the entire nation, for them also you have two sides of a budget. You have the revenue and you have the expenditure. So when I say revenue, so revenue for the government would be, some of them are on the slide, as you all can see. Revenue for the government is, exactly. So it's revenue for the government is taxes and non-taxes. So there are two components to a revenue for the government. It can be tax revenue and a non-tax revenue. Guys, again a small request, please use or send to all participants while trying to answer the question, so that everyone who are there for the session can hear your answers, can see your answers. Okay. So now going back to revenue. So there are two types of revenue for the government. You've tax revenue and you've non-tax revenue. So when I talk about tax revenue, it means all the revenue that is collected by the government from all the taxes in India. So tax revenue forms a major portion of revenue for the government. And here we go on how do we divide the tax revenue further. Tax revenue is further divided into direct tax revenue and indirect tax revenue. Now when I talk about direct tax revenue, what does a direct tax revenue mean? It means a revenue that the government is going to earn from all the taxes that form the part of a direct tax. By direct tax, it means those taxes that are paid directly by the taxpayer. So when you as a taxpayer file for the tax, it is called a direct tax because you are directly filing for that tax to the taxation department. So direct tax is income tax, corporate tax, wealth tax. These all form the part of a direct tax. And Deepak, soon you will look at a balance sheet of the budget. Give me some time and you'll get to know what percentage component does tax revenue forms what percentage of the total budget revenue. We will soon be showing you all the entire balance sheet. Till then, let me just clear the basics for all. So when I talk about direct tax, as I said, it is a tax that you as a taxpayer directly file to the taxation department. So income tax is something that you directly file for yourself. You have corporate tax that is filed by the companies themselves to the taxation department. When I talk about indirect taxes are taxes that are collected from you and paid by an intermediary. That's why it's called an indirect tax, because there's an intermediary in between who's trying to pay that tax. Okay, so that is what is an indirect tax. Indirect taxes are all your VAT, custom duty, excise duty, service tax. So these are all your indirect taxes. And now does direct tax comprise only income tax? Direct tax comprise of income tax, wealth tax and corporate tax mainly, because companies file for something called as a corporate tax and your individual files for something called as an income tax, and wealth tax is basically the tax that is charged upon you for the amount of wealth that has been generated or that has been transmitted to you. VAT is an indirect tax, which is a value added tax. So soon after GST, what you will see is all your indirect taxes go away and all your indirect taxes is just going to subsume under one tax, which is going to be called as a GST, that is goods and services tax. We'll have a GST session altogether. But yes, now let's continue. Now coming to the non-tax revenue. So is everyone clear till tax revenue? Everyone clear till tax revenue? Great. Now moving on to the non-tax revenue. Now non-tax revenue means all the revenues that the government earns from items which doesn't form the part of a taxation revenue for the government. So what is a non-tax revenue? So the components listed on the slides are the components for a non-tax revenue. I will explain to you one by one on each of these components. So first non-tax revenue is one that is called dividends. What are dividends? Dividends are income for the government from all the public sector companies. So basically when all the public sector companies shell out their profits, they are called dividends. When you actually try and pay some amount of your money to your shareholders from your profit, that is called as dividends. For Government of India, all the public sector enterprises give out some amount of their profits as dividends, and these dividends, since the government is a major shareholder in public sector enterprises, these dividends form a income for the government. That is why it comes under non-tax revenue. PSU, yes, so that is why public sector units or public sector enterprise That is where all these public sector enterprise, government is a major shareholder, and they give out some amount of their profits as dividends, and it comes under non-tax revenue. If the PSU is at loss, then obviously there are going to be no dividends. There are going to be no dividends that the company is going to pay. Yes, it includes Amardeep. Yes, it includes all your PSU banks, public sector. It's the same. Others, it's the same. Your PSE and your PSUs are the same. Public sector enterprise or public sector units. These are two words used interchangeably. It's the same. It basically means all the enterprises or units where the government is a major shareholder. So when government is a major shareholder, you call it a public sector unit or a public sector enterprise, and including banks. Okay, to answer your question, Amardeep, it includes banks as well. So banks are also PSU banks. So whatever money these banks or these enterprises give as give out as profits to the shareholders, it is called dividends. For example, let's assume that HPCL makes a profit of 10,000 crore in a year. Whatever amount of money they give out, say for example they give out 3,000 crores as dividend, these 3,000 crore becomes a part of non-tax revenue in the government's budget. Ayushi, yes, if dividends are declared mostly on a yearly basis, but this is not fixed. If the government wants to increase its revenue on a particular year, it can force public sector enterprises to give more dividends. So that is what happened in this year's budget. HPCL, IOC and BPCL. So these three are the major oil marketing companies of India. All three of them were forced to pay out more as dividends. So if these companies make more profit and government wants to, show a higher revenue for itself, it increases the dividend payouts by this company. Because why? Because government is a major shareholder of this company. I hope the non-tax revenue part of it is clear. Now moving to the next important component of a non-tax revenue. Yes, Manish. So basically, your private companies try and give dividend on a quarterly basis, on a half-yearly basis, and at times they do it 1 quarter, then they don't do it 2 quarters, and then they give it 1 quarter. Declaring of a dividend is purely the choice of the company. But in public sector enterprises, they can be forced to give dividends. They can also do it quarterly, half yearly. They might do it in a quarter, might not do it in the next quarter. They can do that. But at the end of it, when the government is preparing the budget, they see it on a yearly basis. So what is the payout for the full year? So if this year as a government I have prepared my budget and I am assuming some amount of money to come as dividends, at the end of the year all these public sector enterprises are bound to give me that much amount as dividends. They give it half yearly, quarterly, that doesn't matter to me, because as a budget maker I will be looking at how much amount have I earned from these dividends at the end of the year. Okay, so I hope dividends are clear. Now moving on to the next part, that is your divestments. What are divestments? So these are basically revenue that the government earns by selling its stake. So there is an enterprise called as Sutti, which is special special undertaking of Unit Trust of India. This is a holding company. And on this holding company owns shares in various listed and non-listed companies. So when the government sells its stake in either of these companies, then it is called as a revenue. Now, yes, divestment and disinvestments are, so both these words have slight different meaning, but it's almost used in a similar concept. So I'll give you the difference. Divestment is basically when the government, when a particular enterprise disposes of a part or all of its business. It's called divestment. And what is disinvestment? Disinvestment is when you try and sell some amount of your assets in a particular division of a company because it's not performing as per expectations. Okay, so that is called as disinvestments. Okay, I will repeat the difference between divestments and disinvestments. Divestments are basically when the government or the company tries to disposes of a part or all of its business. That's called divestment. And what's disinvestment? Disinvestment occurs when an organization, it tries to liquidate or sell off part of its assets which are not generating sufficient return for them. Okay, I hope now the difference between divestment and disinvestments are clear. The company that I mentioned, I will kind of write it down for you all. It's called the Sutti. So you would have heard this name a lot in the news. It's the Sutti because this is basically a holding company for the government. Why holding company? I will give you all the full form. It's the specified undertaking of Unit Trust of India. I'm writing it down for you all so that it's called the Sutti, S-U-T-T-I, which is a specified undertaking of Unit Trust of India. And what is this Sutti? The Sutti is essentially a company that holds shares in various listed companies of India. For example, government holds stakes in Axis Bank, in ITC, in ICICI Bank. All these are listed stocks, right? So government holds stake in each of these stocks through a company that is called Sutti. I'll repeat, it's Sutti, specified undertaking of Unit Trust of India. That is what a Sutti is defined as, and this is a company which holds shares. So it is basically a holding company for the government of India. And when government tries to sell its stake in Axis Bank, ITC, ICICI Bank, it's called, they earn a revenue in that particular year, and that revenue forms the part of your non-tax revenue. So I hope two components of your non-tax revenue are clear. Now moving to the next important component of a non-tax revenue, of your non-tax revenue, it's called the spectrum sale. Okay, your spectrum sale is basically related to your telecom sector. What exactly in telecom sector? So basically, let's not go much technical and just understand the basic of a spectrum. Whenever the companies, all your telecom companies, like, yes, spectrum is related only to telecom. So these are whenever your telecom companies want to launch a new wave, so like your 3G or 4G, so that is called as a spectrum band or a spectrum wave. Now these are waves that are essentially owned by the government, but these telecom companies have to buy out or lease out these spectrums from the government. This is only related to your telecom sector. Deepak, your spectrum sale just took place last 3.5 months ago. There was a spectrum sale that was done for there was a spectrum sale that was done by the government of India. Okay, and it keeps happening. Yes, mostly it happens every year, but you cannot be fixated that it will happen every year. It depends upon the need of the telecom players. So today they need more 4G band, and hence you see a lot of 4G spectrum sale that has been happening. Similarly, there was some spectrum sale that happened for 3G as well. Okay, so that is what is spectrum sale. I will stick to Abhishek. I'll try and stick to the budget today because I need to complete a lot in budget. But I will definitely explain you 2G scam through via email, which you can drop to us, or we can have a discussion in some other session, because today let me just concentrate on budget. Now I hope till spectrum sale, which forms the third important part of your non-tax revenue, is clear. And the next important part is your interest receipts. What are interest receipts? These are interest payments that are earned by the government for various borrowings, various lending that the government has done. Okay, I'll explain. So for some of you, I'll explain spectrum sale again. Spectrum sale is nothing but telecom. So it's related to your telecom sector. All your telecom players like RGO, Idea, Vodafone, Airtel, they all need these spectrums, which are like your bands, to transmit their network connection. So all your 3G, 4G, 2G, they all need spectrum to be transmitted. Now to do that, these spectrums are owned by the government. Okay, these spectrums are owned by the government, and government earns revenue which when it does a spectrum auction or a spectrum sale. So basically these telecom companies have to bid for buying out these spectrum bands, and whatever amount the government gets from this bidding becomes a part of their spectrum sale, non-tax revenue spectrum sale. Now moving on to the next component, which is interest receipt. Moving on to a next example of interest receipts. Interest receipts are basically income. These are interest income that are earned by the government from various lending that is done by them. And one example of lending could be lending of a loan to another country, to another smaller country. If you lend a loan, for example, if India lends a loan to say South Africa or any other small nation, then whatever interest you earn on that lending, it forms a part of your interest receipts. Okay, and then you have other non-tax revenues, which could be interest receipts does not include repo rate. Deepak, repo rate is related to your RBI. It's not in the hands of the government. And yes, even domestic lending. So I just gave an example of lending. Even domestic lending form a part of interest receipts. Okay, interest receipt for the government, and then you have the other non-tax revenues, which are revenues for the government, but are not under any major head. Soon you will get to see a balance sheet, which will make things much more clearer for you. Now there's a question for all of y'all. If you all know, this is going to be the first budget that is going to do away with the difference between plan expenditure and a non-plan expenditure. So from the budgets before this year's budget used to have your expenditure divided between planned expenditure and non-planned expenditure. But this year the government decided that it will do away with the distinction between planned expenditure and non-planned expenditure, and this year became the first year when they said that we will have this distinction between your expenditure on the form of your revenue expenditure and capital expenditure, which I'll explain in detail going forward. Now you'll need to tell me, name the various forms of non-tax revenues. Come on guys, I need you all to put in some answers, whatever you all remember. And yes, as Teja has got his dividends, come on, more answers. Dividends was one of them. What else? Yes, divestment, spectrum sales, interest receipts. Right, so good, you all remember. So there could be a question for you all in an MCQ that could be, name the various forms of non-tax revenue for the government. The next question, name the various forms of indirect tax revenue. What are the indirect taxes? Yes, VAT, excise, custom duty, service tax. Right. So true, good. Great. Now let me yes, even entertainment taxes and indirect tax. And now coming to the next part. So earlier, before this budget, your expenditure was divided between planned expenditure and non-planned expenditure. And further, planned expenditure was divided between revenue expenditure and capital expenditure, and non-planned further divided between revenue and capital. The basic difference between a planned and non-planned expenditure was that your planned expenditure included all the expenditure that was planned by the planning commission and was a part of your budget. Simply understand. Don't complicate and don't go too much into technicalities and then get confused. It's as simple as if you're going on a vacation. Okay, if you go on a vacation, what could be a planned expenditure for you all? If you go on a vacation, your planned expenditure would be tickets. Yes, what else? Hotel, transport. Essentially, this is how it worked for the it worked for the government as well. So whenever planning commission planned for expenses, those expenses were form a part of planned expenditure. And whenever whatever expenditure was a day-to-day routine expenditure for the government, it was clubbed under the non-planned expenditure. Basic simple understanding: planning commission, whatever the planning commission decided and budgeted for became the part of planned expenditure, and whatever was not planned by the planning commission became the part of non-planned expenditure. But government did away with the planning commission of India, and that is why this year they decided that, if there is no planning commission, what's the point of dividing between planned and non-planned expenditure? Might as well let's have a more focused approach where we divide the expenditure between revenue expenditure and capital expenditure. Now this is important for you all to understand the difference between a revenue expenditure and a capital expenditure. Very simple. Capital expenditure essentially are expenditures. Defense was a planned expenditure, Daksh, under the earlier regime. Now defense would form a part of your capital expenditure. Okay, so basically difference between, no, that's not actually the way to hide your planned expenditure. It's just a way of making it more crystal clear for people to understand what amount of money are you trying to spend on capital creation. Why? Because all the expenditure from a government's perspective, what is a more meaningful expenditure? Those expenditure that leads to capital generation are expenditures which are more meaningful from a longer term horizon. And that is why a decision that, let's be more crystal clear in deciding that an expenditure is divided between revenue and capital expenditure. And yes, Abhishek, I'm explaining that a capital expenditure is an expenditure that is incurred by the government on creation of assets. So when I say when I say capital generation, it means creation of assets. So when you spend it on defense, it's a creation of assets. When you spend it on machinery, it's a creation of assets. So basically all the expenditure that you try and do on creation of assets become a part of your capital expenditure. So all your expenditure on defense, railways, roadways, urban development, they basically form a part of your capital expenditure, because that is where you have spent on creation of some assets, right? And what's a revenue expenditure? What's a revenue expenditure? Revenue expenditure is basically an expenditure that you're doing in your normal day-to-day administration and your normal day-to-day running. That's called your revenue expenditure, because these are expenditures which are not creating an assets for you over longer term duration, but all your welfare schemes, social welfare schemes, all your welfare, social welfare, rural development subsidies, these are all part of your revenue expenditure. So if you want to clearly distinguish, yes, salaries of government is included in revenue expenditure. Why? Guys, when you have options, when you get a list of options and you're told, can you classify this expenditure as a revenue or a capital expenditure? Just ask yourself one question. Just one question and you'll get the answer. Is this expenditure creating an asset for the government? If the answer is no, you'll mark revenue expenditure. Now to Ankita, you asked me salaries of the government. Is it creating any asset for the government? Is salaries creating any asset for the government? Yes or no, guys? No. So it forms a part, then it becomes a revenue expenditure. So ask yourself one simple question when you have been given to classify between revenue and capital expenditure. Just ask yourself, does this expenditure create an asset for the government? If your answer is yes, mark it as a capital expenditure. If your answer is no, mark it as a revenue expenditure. Okay, and I'm going ahead, I'm definitely giving you all an example on each of, no, Pallavi, you cannot compare revenue expenditure and non-planned expenditure, because even in plan and non-plan, when we had that distinction, your plan was further divided into revenue and capital, and even your non-plan was further divided into revenue and capital. So you cannot make a similar comparison between revenue expenditure and non-planned expenditure. They are different, but the classification that they are trying to follow it now becomes a part. Salaries to defense personnel is a, come on, now I want you all to answer. Salaries to defense personnel, is it creating an asset? Yes or no? So it is a revenue expenditure, right? So you all have understood the concept behind it too. So it's very simple for you all to decide at which part would form a which expenditure will go under which. Now coming to revenue expenditure, here are some of your examples for revenue expenditure. It's your interest payments, subsidies, pay allowance, agriculture and farmer welfare, education, health and family welfare, rural development, other revenue expenditure. So these are your broad heads for revenue expenditure. If you see that most of your expenditures which are done on a daily basis forms a part of your revenue expenditure. Your interest payments, in case the government has done a lot of borrowing, your subsidies, your agricultural and farmer welfare, because rural development here essentially means the giveaways you are giving to the people. That's essentially a giveaway that they are talking about here, not expenditure on building of roads for rural. If they are building roads for rural, then it goes under capital expenditure. Okay, then it goes under capital expenditure. Universal basic income, guys. So you've highlighted universal basic income. What was universal basic income? Universal basic income was a concept that they wanted to bring, wherein they said that everyone would get a minimum basic salary. Now, does a universal basic income create an asset? Come on, you all answer. Yes or a no? No. So if there would have been a universal basic income, which expenditure would it have formed part of? It would have gone under revenue expenditure. Clear, simple classification. Okay, I will repeat. Your your capital expenditure is all the expenditure that you are trying to do on creation of assets, and your revenue expenditure are normal day-to-day. Is all you've spent on your normal day-to-day business, normal day-to-day administration. Okay. Now moving on to capital expenditure. Now your capital expenditure is essentially your expenditure on defense, railways, roadways and highways, urban development and other capital expenditures. So whatever you spend on building, it is called Shweta, as I highlighted, whatever spend you do for giving away to rural areas, like your subsidy or farm loan waivers, these are your expenditure on rural, but which is not creating an asset for you, that will be a revenue expenditure. But whatever you spend on building of roads or pakka roads or houses for the rural areas, that will form a part of your capital expenditure. Okay, I hope this is clear. And this distinction between revenue and capital expenditure is clear. Now, moving to, there's a question for you all. Which expenditure is necessary to analyze in order to understand the capital generation being done by the company? In order to understand, exactly. So it's your capital expenditure. So, right, bingo to all of you all. It is basically your capital expenditure. And guys, henceforth, if you want to try and analyze the budget of the government, you tell me which is a more productive way of spending? Which is a more productive way of spending? Capital expenditure. So essentially, when a government tries to focuses more on capital expenditure, it is trying to make more productive use of the money it has. Because your revenue expenditure is not going to create anything for you over the longer term. It will not get you growth over longer term. What will get you growth and what will lead to a benefit for you as the government is going to be the capital expenditure. Okay. Now, guys, as you all can see, this is a snapshot of the budget, and these are numbers. You can go through it, but I would like to highlight a few things. So, yes, definitely, Lonish, your growth is dependent upon your capital expenditure. Yes, I am. Okay. Yes, I would be sharing across a PDF, so don't worry about that. But this is just to give you all, a basic detail. So if you try and see, your receipts have direct taxes and indirect taxes, as I explained you all, and then you just list the part states share, and what you get is a net tax revenue, and from there you have to highlight. So basically try and understand this expenditure part of it. Where exactly has the government spent more this year, guys? I have highlighted the two things. That's your health and family welfare, where your expenditure is up 23.8%, which is a 24% increase in your expenditure on health and family welfare. As you can see, health and family welfare is a revenue expenditure. And if you see overall revenue expenditure this year is up 6%. And overall capital expenditure this year is up 10.7%, with the maximum increase in your roadways and highways at 31.9% and your railways, which is 19%. So if you see, if you have a question in the exam, that which expenditure under capital expenditure has seen the highest increase year on year, that answer for you all would be, guys, what would be the answer you will mark? Come on. Exactly, your roadways and highways, because as you can see, your roadways and highways has increased by 31.9%, or essentially you can say 32% increase in that. And in revenue expenditure, you've increased 23.8%. So your health and family welfare has increased by 23.8%. Overall, your revenue expenditure is up 6% and your capital expenditure is up 10.7%. Okay. Now tell me that this year, if you have to kind of say where has the government spent more money, which expenditure has the government increased spending, that would be between revenue and capital expenditure. Exactly, Tanvi. So right, it's the capital expenditure, because your capital expenditure on a whole has increased 10.7%. It's a double-digit growth for capital expenditure that you can see that the government has done. I will definitely be sharing across an analysis on of the budget. Some of you all would have definitely got the update on budget as well. It has this budget snapshot, but I will share it with others as well. Okay. Now, moving on to another interesting aspect. I'll spend some time here for you all to get some basics and analysis on analyzing a budget. These are called the budget parameters. Okay. What you're trying to understand, FY 16-17, not units, not in percent. So your FY 16-17 figures are in billion, whereas the YOY growth figure that you could see is basically a percentage figure, because YOY means you want to try and understand the year-on-year growth. So all these numbers are percentage increase. So you will see that this column shows you how much increase have you done in your 17 budget, and this is your 18 estimated that the government has presented the budget, and this YOY growth essentially shows that this year how much are you going to spend more compared to what you spent last year. Okay, so this is YOY growth, which is year-on-year growth given in percentage, and these numbers 16, 17, 18 are in billion. I hope that's clear. Now coming to the parameter of a budget. So now this is how you analyze a budget. A budget has three most important parameters or most important outputs to be achieved, and these three, YOY growth means year-on-year growth. Okay. Okay. Now coming to the budget. So you basically have three important parameters to decide your the outcome of your budget. Okay, so basically you've growth, you've inflation, and you've fiscal deficit. Growth is measured by GDP. What's GDP? It's the gross domestic product. A gross domestic product measures the amount of goods and services that are produced in an economy. So whatever growth that happens in your GDP essentially form part of your economic growth. And the second important aspect is your fiscal deficit. What is a fiscal deficit? Your fiscal deficit is if a government spends more than its revenue, it's called a fiscal deficit. Okay, if your government is spending more than what it is earning, it is fiscal deficit. So expenditure minus revenue, whatever is the extra amount, forms a part of your fiscal deficit. Now guys, understand, if I am the finance minister, okay, if I am the finance minister, or if you all are the finance minister, which two aspects would you try and balance out from this budget parameters? Which two aspects will you try and balance out? Anavnesh, exactly. It's your growth and fiscal deficit. And why would you try and balance these two things? Because you cannot get growth and you cannot achieve your fiscal deficit together. Why? Because if you want to get growth, I'll explain that, Abhishek. I'll soon explain why not inflation, okay? If you want to get growth, if you want to increase your GDP in a scenario where we are today, demonetization, your growth has been hit. As you know, some of you highlighted rightly that GDP growth this time is down. Why? Because we've been hit by demonetization. What has demonetization hit? Demonetization has hit your consumption. And if demonetization has hit your consumption, it is going to hit your growth quickly. I would want to, explain you all an economic growth cycle so that this remains with you for forever. And your simple explanation for this is investments leads to generation of income, which leads to generation of demand, which leads to rise in inflation, which leads to increase in profits, which further leads to investment. Now, what is this? This is an economic growth cycle. Okay, I will not take more time here because I just want to give you all a basic sense here. An economic growth cycle essentially functions in this way. Investments become an important and the most important part to boost growth cycle. Why? As you can see from this cycle, your investments would lead to generation of income, which will lead to generation of demand. Why investment leads to generation of income? Because investments mean that public sector as well as private sector units will set up more factories, they will employ more people, and they will give more money as salary. Okay, so when they kind of give more money, it leads to generation of income. If your generation of income, then it leads to generation of demand, which leads to rise in inflation. Why rise in inflation? Because if your demand increases and your supply is constant, what happens? What happens, guys? Simple demand and supply, y'all. Your demand is increasing. What happens to your prices? Your price will rise, which means there's going to be inflation. If your inflation goes up, your profits increase. As a businessman, a rise in profits means rising prices, which is good for your profitability. And if your profits increases, you will put that money back as investments. What you'll do? You'll put that money back as investments and the growth cycle will keep moving. If your investments fail to happen, your growth will not happen. Okay? If your investments happen, your growth will not happen. And Abhishek, exactly, if you look at this cycle, you will get the answer to your question, why some inflation is considered good. Because your inflation essentially triggers your growth cycle to keep moving. If you don't have inflation, your growth cycle wouldn't move. And that is why they say that some amount of inflation is needed for an economy, because it is needed for the growth of an economy. But always remember, your investments is the point from where your growth cycle picks up. Investment is the point from where your growth cycle picks up. And so now give me a sense. What if capital expenditure is increasing? What is the government trying to do? If the capital expenditure is increasing, what is the government trying to do, guys? Increase investments. Bang on. So if you're trying to increase investments, you're trying to improve growth. Okay? I hope this is clear where this economic cycle has come into play. And if you say investments are basically your capital expenditure. Okay? Investments are basically your capital expenditure. So government spending more on capital expenditure will try and boost its economic growth. But on the other hand, if it is spending more, okay, what is it giving away? Fiscal deficit. Why? Because if it has to keep sustaining growth, it has to somehow fund more investments, and to fund more investment, it has to borrow. And if it borrows, your fiscal deficit increases. And yes, Lavnish, on this cycle, in this growth cycle, the only leakage in this cycle is savings. So if people save more, your growth cycle would be slow. Okay? Now understand the fiscal deficit part of it. If as a FM, as a finance minister, I want to spend more. If as finance minister I want to spend more, I will have to manage it. And if I have to manage it, I will have to increase my fiscal deficit. And why I'm saying that? Because I have limited scope of revenue, and I want to increase my economic growth. And why essentially important this year? Because of demonetization. The demonetization has hit demand, which means it has hit your consumption, which means it has hit this aspect, that's generation of demand. Now private sector enterprises, because there is no demand, doesn't want to do investment. So who's responsible for investments? It's the government who's responsible. And hence if the government is responsible, then you will have the government seen to spend more, and that is what has been done in the budget. You have more investments in the form of capital expenditure. But at the same time, your fiscal deficit, simple, if your demand goes down, then what happens to your growth? What are the impacts on your economy? Your economic growth cycle will slow down. So you have to consistently have all these elements moving together. Okay? Now, so that is where I explained your economic growth. And fiscal deficit happens because you have limited amount of spending leeway. As you could see, this year government wanted to get growth but did not wanted fiscal deficit to go for a toss. Hence they had tried, and hence this year they have tried and maintain a balance as much as possible between the two, and still tried and achieve its fiscal deficit target. I mean, it's delayed by a year, but I'll be discussing your fiscal deficit target soon in the coming up slides. But this is where you essentially kind of analyze a budget between growth and fiscal deficit. And inflation is again an outcome, guys, as I said. Inflation is an outcome, and it is dependent upon the RBI to control this inflation. It's dependent upon an RBI to control the inflation aspect of it. Because after your economic growth cycle keeps moving and you keep pumping in money, there is high chances that your inflation crosses a certain level, and then RBI kind of steps in and tries to control that. And the whole role of an RBI in this is something that we'll cover up in some other session, because today we have to essentially clear some important aspects of budget. But I hope this gives you a basic framework. And moving on to the fiscal deficit trend in India. So if you could see this trend, essentially this year we're going to 2018, we're going to target a 3.2% fiscal deficit. For 17, we had a 3.5% fiscal deficit, and if we on FY16 we had a 3.9% fiscal deficit. Okay, so that is what is the fiscal deficit trend. And if you see over the last few years, we've been kind of trending downwards. That's kind of trending downwards. If you see, that's kind of trending downwards. Now, question to you all which might appear in the exam: what is the fiscal deficit target of the government for FY18? I want answers, guys. Come on. Fiscal deficit target for the government for FY18, exactly 3.2. And what was the fiscal deficit for FY17, guys? 3.5%. This is a question that can definitely be asked to y'all. Okay. Now, moving to the key spending areas of the government this year. Okay, Lavnish, FRMB then in case puts limit on GDP percentage? No, because your FRMB is basically trying to tell that you have to control inflation, which will definitely have an impact on your growth. But that's the choice they've made, that we have to get our inflation in a range. Okay, so we have to get our inflation in a range, And if it is at the cause of a growth, yes, everything is interrelated, as I explained to you all. So be it. But I want to achieve my inflation target. That is what the RBI has given to the committee. So your monetary policy committee has been given a target for inflation. Okay, it's 4% plus or minus 2% is the inflation range that has been given as the target. Now coming back to your budget, you are basically going to see this could be asked to you all. Key areas for this year of spending is your revenue expenditure, which is up 6%. In revenue expenditure, health and family welfare has increased 23.8%, which is the highest increase. And if you see, your capital expenditure is up 10.7%, and in that your roads and highways has seen the maximum amount of increase, which is going to see an increase of 31.9%. Okay guys, so some of you all want me to cover the monetary policy committee. Let me give you all a background of that. So before the monetary policy committee came into existence just recently, before that we had a regime in which the RBI governor was the deciding authority. He was the one who used to decide that what is going to be the monetary policy for a government going ahead. So basically, if he wants to increase the repo rate or decrease the repo rate or keep the rates unchanged, it was solely the responsibility of the RBI governor to take a call. There was definitely an advisory committee that used to advise the governor on what he could do, but the sole responsibility of doing that lied with the governor. What the government said, they proposed that we need to have our monetary policy committee in place, and this monetary policy committee is henceforth going to decide your monetary policy trajectory. So basically, it's a 6-member committee, and all the members will have to vote. Their monetary policy committee is a part of the RBI. So it consists of 3 members from RBI and 3 economists. So it's a part of the RBI only, but they together decide, whereas the governor is a chairman. So you're just telling the governor that it's not your sole responsibility, but the responsibility of all the 6 members of the committee to decide what is going to be the path, the monetary policy path that we are going to take, and what has been given as the KRA. So let me use the word KRA because every one of you all, Lavanish, I'll do that, but in the next session, what is a monetary policy committee, various presentations that they've done, and what is the take from the kind of rate changes and everything. So we will have a session excluding that. Katyani, no, it's just a 6-member committee including your RBI governor. So your RBI governor is the chairperson of the committee, and total there are 6 members in the committee, where your governor is the key person. I use the word KRA, it is called the key rating area or the key responsibility area. If some of y'all are doing jobs, you will understand that is where your ratings and your hike and everything is related to. That is why I use that term. But in simple ways, it's a responsibility and given to the monetary policy committee to keep the economy in a particular inflation range, which is called the inflation targeting. So that is essentially a change that you've seen, because we have said, and we've told the RBI that you need to follow an inflation targeting regime, which means you have to essentially target on inflation, and you don't have to focus much on growth, because even for RBI, every time there used to be a dilemma that if we do this kind of spending, my growth will go this much, but what happens to my inflation? So this monetary policy committee has now been given a clear mandate that you need to follow a inflation targeting regime, which means your responsibility is keep the inflation under control in the target, and that target is 4% plus or minus 2%. Okay. Yes, so Abhishek, all the gains that they are going to get from the income declaration scheme forms a part of their revenue, but that, according to a lot of experts and a lot of economists, is as of now being underestimated a little. But the exact figure would be is something that you cannot expect the government to do, because the entire demonetization process and then trying to curb out more black money can give them more money as well. Okay. Now moving ahead. Now a question for you all. Which expenditure head in capital expenditure has seen the highest growth in this year's budget? Exactly. It's roads and highways. Now explaining to you all the major changes that has been proposed in taxation this year. Okay, some of the essential changes. So important. So here I'm trying to highlight to you all some of the major and the important changes, and the first one being the change in your individual income tax slab, which for income earners between 2.5 lakh to 5 lakh, the earlier tax they used to pay was 10%, that has been halved to 5%. Uttam, definitely I'll explain you what's a repo rate. As I said, I will have a specific session on entire functioning of the RBI, explaining you all monetary policy kinds of rates, monetary policy committee, and everything. Okay. So now moving back to what was done in this year's budget, you'll be talking about taxes here. So here when I talk about taxes, an important one being the income tax. So when I say about a change in income tax, the major change brought about is in the range of 2.5 lakh to 5 lakh. From a 10% tax slab, you've brought it down to 5%, and this is the only change in the income tax slab, which means 5 lakh to 10 lakh, your 20% remains the same. So how are you dividing it? From 0 to 2.5 lakh, you pay nil tax. From 2.5 to 5 lakh, you pay a 5% tax. And from 5 lakh to 10 lakh, you pay a 20% tax. So that is what essentially is your taxes. Okay, in your income tax, and that's the major change. Though expectations were that they might do a lot of changes to the income tax slab, but that's done, guys. Exchequer basically is the government. You call it the exchequer because it is the person who's earning that much amount, giving away that much amount, but it's essentially the government. Don't get confused with the word exchequer. It's the government. 10 lakh above is so basically, as I said, so then no, that is not your Vishal. So that's not your new tax slab. You're saying it 3 lakh because you are including the benefit. You're including the income tax exemption, but that is why. So if you include the income tax exemption, you say it comes to 3 lakh, but essentially it is 0 to 2.5 lakh, you pay 0 tax. 2.5 lakh to 5 lakh, you're going to pay 5%. 5 lakh to 10 lakh, you pay 20%. And above 10 lakh, you pay 30%. Okay. Guys, exchequer is the government. Okay, exchequer is the government. Okay. Since you all have a question on how tax is calculated, let me take a very simple example to explain you all how a tax is calculated. Suppose income for a year, for suppose Mr. A. Okay, he earns an income of about 8 lakhs. Okay, so what you say that till 0 to 2.5 lakh, you're going to pay 0%. Now in the new regime, 2.5 lakh to 5 lakh, you're going to pay 10%, which essentially means, sorry, you're going to pay 5%, which essentially means you'll pay rupees 12,500 as tax, and from 5 lakh to 10 lakh, you pay 20%, and this person is earning 8 lakh, which essentially means 3 lakh above 5 lakh. So on 3 lakh, he has to pay 20%, which is 60,000. So the tax for this person is going to be 72,500. Guys, clear? Clear? This from your next financial year, which means from 1st April to 1st April 2017 to 31st March 2018, all income between 2.5 lakh to 5 lakh would be 5%, which essentially means for all your tax slab you are trying to save. Guys, this is just a basic example. I have not included exemptions. I have not included your kind of reimbursements that you get. I have just taken a very basic simple example of 8 lakh. Lomanshish, I have just showed you the calculations of 72,500 because here your tax slab is 5%. So on that you might have calculated it at 10%. So I've just shown you the calculation. It's 72,500. Okay. No, Vishal, it's till 2.5 lakh. You have your exemption as 0%. What I have not included is your benefit that you get under 80C. Okay, so I am not reducing that amount. That is why I said this is a basic, simple explanation to explain you all how a person is going to get income. Lovanish, it is not 5% of 5 lakh. Between 2.5 to 5 lakh, you just earn 2.5, so 2 lakh 50,000. So you're charging 5% on 2 lakh 50,000 because that is till 2 lakh 50,000 you're paying 0. And between 2 lakh 50,000 to 5 lakh, which is just 2 lakh 50,000 ka income, you are earning 5%. And between 5 lakh to 10 lakh, so you're earning incremental 3 lakh. Okay. For a person who is earning 8 lakh till 5 lakh, you have to pay 12,500. And above 5 lakh, you're earning 3 lakh on which you're paying 20%. Okay. I hope this is clear. And now, and the next important change that has happened in the income tax is that, so basically the government has, reduced taxation between 2.5 lakh to 5 lakh in order to compensate some amount of loss or cost that they are going to incur. They said that they will charge 10% surcharge on individuals that earn between 50 lakh to 1 crore per annum. So that is an incremental 10% surcharge these individuals are expected to pay. ठीक है, 10 lakh के ऊपर 1 crore के ऊपर you already have a 15% surcharge. So that's about taxes. Then now coming to your corporate tax. You need to understand this is a big change announced by the government. They've reduced your corporate tax rate by 5% for your companies that have an annual turnover up to 500 million. Which essentially means 50 crores. So any company that has a turnover of less than 50 crores, whatever profits they earn, they will have to pay 25% tax. Corporates today pay 30% tax. You brought it down by 5 percentage points and you're going to make these people pay 25% tax, which essentially is a 5% benefit to small and medium entrepreneurs of India. And according to government data, it is 96% of the companies who file for taxes in India fall under this slab where they will get a 5% exemption. Now this is going to be huge, right? 96% companies filing tax of turnover less than 50 crores. So you're basically trying to motivate and trying to give incentives to small and medium enterprises. And why are you doing that? Because they have been the one who have been worst hit by demonetization. They have been the hardest hit by demonetization, and that is why you're trying to give them this benefit so that they can survive their business. So this is a big benefit to them. Now next, coming to the next major focus area for this year's budget was the rural sector. So basically there was a lot that was given to your rural sector in order to basically lower down the pain, because your tier 3 and tier 4 town, Uh, Varun, your question to me is, but GST won't affect the MSMEs? Yes, GST is essentially going to affect the MSMEs, and in the GST session that we are going to have soon, you will understand that why MSMEs would be the worst hit by GST. So we'll have a full-fledged session on GST to explain you all the functioning of GST, the rates of GST, and how it affects your small and medium enterprises and what the government is doing. So soon we'll have a session on GST as well. Now coming back to budget and what they've done for the reduce the rural sector pain in the budget. Essentially, you have the crop insurance. So the government has proposed to raise coverage under the Fasal Bima Yojana scheme to 40% in 18, 40% in 18 and 50% in 19. So basically, till December 2016, around 26% of the farmers were covered under your Fasal Bima Yojana, and you're trying to increase that number to 40% in 18 and 50% in 19. But however, what one needs to understand is if the insurance cover per farmer per crop is adequate. Okay, that is one essentially needs to understand. And why your crop insurance is important, guys? Because crop insurance is a productive way of spending by the government for the farmers. So instead of giving away the money, you're trying to spend it. You're trying to spend it in a much good way, which is the name of the scheme is Fasal Bima Yojana. Fasal Bima Yojana, simple. Bima Yojana is insurance, insuring your Lovanish, we'll have a discussion on GST in detail, so don't worry about that, okay? We will explain your net effect of GST on everything, okay? And so coming back to crop insurance, your crop insurance essentially will help farmers because you are insuring his living, okay? It helps farmers to, it's a productive way of spending because you're trying to improve the efficiency of the farmers. Okay, so that is what a crop insurance is. And yes, Shivank, you're right, it's a revenue expenditure. Now the next important aspect to relieve the rural sector pain is what is called as a national agricultural market. So this is basically going to be an electronic market where the government wants to connect what they are they essentially want to connect the farmers directly to the vendors. Why? Because in between there is a lot of players who eat away the money and we get it at a higher cost and farmers don't earn much money. So the budget proposes to increase the coverage of the national agriculture e-national agriculture market to 585. Currently we are at 250, so we are trying to more than double the reach of electronic markets so that farmers essentially get the right amount of money for their harvest. Okay, but as I have highlighted here, critical to this is the state's reform of their APMC Act. What is an APMC? An APMC is an Agricultural Produce Market Committee. So basically this is a committee that is essentially charged of hoarding because it is there in every state and they kind of produce it from the farmers, procure it from the farmers, and then they sell it to the vegetable vendors who again sells it to us as the consumers. So in between there is a lot of money that is taken over, and there's a lot of hoarding that happens from these APMC markets because they always want to try and increase prices. So the success of a e-national agricultural market will also depend upon the reforms that take place in the APMC, that's the Agricultural Produce Market Committees. So that will also your APMC is your Agricultural Produce Market Committees. Now these are essentially committees which are formed with the help of an act which is called the APMC Act, and these committees are essentially committees that procure from the farmers and try to manage rates from that rates at which the vegetables, fruits and harvest are being sold at. Abhishek, 585, currently we have around 250 national agricultural markets and electronic national agricultural market. We want to increase it to 585 in number. So you have 250 such markets, you want to increase it to 585. Okay. Okay. The next important hold on. The next important boost that the government has given is to the affordable housing. So as you all can see, I am covering the first important things done at the beginning, because it helps you understand. So the second important big thing that is done by the government is on the affordable housing boost. So what is that? Three things important in affordable housing. First, they have given a grant of infrastructure status to affordable housing. What this means, a grant of infrastructure status, which means earlier affordable houses did not form a part of your infrastructure, and they were just a building of your real estate or houses built up. Now giving it an infrastructure status means that all the developers who would be developing affordable housing will get the benefit of all the exemptions that an infrastructure builder is eligible to. So it increases a lot of incentives for builders to build more affordable housing, and thus it is expected to attract higher investments in the sector. The second important thing with respect to affordable housing is income tax exemption for developers of affordable housing with a carpet area of 30 and 60 square meters in 4 metros and non-metros respectively, instead of built up area of 30 and 60 square meters. So the major change here is that government defined affordable housing earlier on 30 and 60 square meter built up area. They have now got it to carpet area. The difference between a carpet area and a built up area. Your built up area also includes other amenities that are available on the floor. So your lobby forms a part of your built up area, which is not a part of your corporate area. So all those extra things which don't form a part of your house form a part of your built up area. That forms a part of your built up area. So basically by doing this, what they have done by doing this is essentially getting more houses under the ambit of affordable housing, because you are increasing the square meter allowance. Okay, you're increasing the square meter allowance, and that is where you're trying to improve the incentive for the builders, and you're trying to say that these builders will get income tax exemption if they build affordable housing. And this time you've defined affordable housing very clearly. And what's the definition? 30 square meter built up area in metros and 60 square meter 30 square meter carpet area in metros and 60 square meter carpet area in non-metros. This has been changed from built up area. So just to again say, built up area is your carpet area plus the thickness of your outer walls and the balconies and the lobbies. So what all, this doesn't form a part of your corporate area. And the third important thing is 10 million affordable houses by 2019. So basically, okay, Aditya, so basically 30 square meter is for your 4 big metros and 60 square meters is for your all non-metros. All your non-metros, which includes your tier 2, tier 3, tier 4 towns. Uttam, no, so it's not for the developers. It's not for the developers, and this scheme becomes applicable not on your income tax bracket, but on the kind of the house you are trying to buy. So if you buy a house which is 30 square meter of carpet area in Mumbai, you can get the benefit of affordable housing. Okay. And secondly, you say 10 million affordable houses by 2019, which is a 39% rise in allocation in your Pradhan Mantri Awas Yojana. Yes, so that's one thing. Even for the buyer, it will depend upon the kind of house that you are trying to buy, Uttam. So if you buy a house 30 square meter in Mumbai, you are eligible for the benefits of affordable housing. Okay, so it is not dependent upon your income tax slab. It's dependent upon the square meter of house that you are trying to buy. And secondly, 10 million affordable houses by 2019 is what the government intends to develop, and this is like 39. So they've kind of increased their allocation per Pradhan Mantri Awas Yojana by 39%. Okay. And the next part is you have to answer this question. For which income category the tax slab has been reduced from 10% to 5%? And yes, so you all would get all these answers right. So it's 2.5 lakh to 5 lakh. Coming to how has affordable housing been defined in the new budget regime? Uttam, it will not be dependent upon the income. So be clear, it will be dependent upon the house that he is trying to buy. If that house is 30, yes. So as Abhishek has put in the answer, it's basically it's dependent upon your square meters of house that you're trying to buy, 30 square meter and 60 square meter. Metro, non-metro. So it will be dependent upon the, yes, it's the carpet area, not the built up area. That's the definition that has been changed. So 30 square meter carpet area in metros, 60 square meter carpet area in non-metros. Yes, Lovanish, yes, your effective built-up area essentially increases, but that is not how you are looking at while funding your affordable houses. That's not how you're looking at. You're looking at it from a square carpet area perspective now, and definitely it gives a boost to your build-up area. And Abhishek, yes, it's Delhi, Bangalore, Kolkata, and Mumbai are the 4 metros. Okay. Okay, now going ahead. Now, coming to some of the major structural changes that have been announced by the government in this budget. And when I say it's a structural change, what I mean is a long-term change in the way a particular thing has been done. So that is why you call it a structural change. A change that changes the structure of the way things are happening. So that is called a structural change. Now, 2 important structural changes. One being the reduction in ceiling for cash donation to political parties from 20,000 to 2,000. Now, this could go a long way in inculcating transparency in funding political parties in India, because see, essentially, will it curb black money circulation? No, but can it in the longer run try and ensure more transparency? Probably yes. Probably what they are looking at. How it will flow remains to be seen. But as of now, they've reduced the number to 2,000. So any political, because any cash donation ceiling becomes 2,000 now. So any cash you have to give becomes 2,000. And the next important thing to get here is also electoral bonds have been launched for political funding. Now, what are electoral bonds? Now, electoral bonds this is a new concept that has been brought about by the government. Till today, yes, I'm explaining that. So, till today, your bonds were essentially issued by the RBI or the government. Now, they want that, specific banks issue bonds. Electoral bonds mean bonds issued for election funding. So bonds that you will issue to get election funding are going to be called as electoral bonds. No, not essentially loan. You're not trying to push white money. You just what you're trying to do is that you want accountability of the money. So if you try and purchase a bond and you want to fund a political party and you purchase a bond, that money is recorded. So your money becomes recorded and it becomes a white money. Okay, so these, yes, so I'm coming to where will these electoral bonds, one can purchase these electoral bonds. There would be specified banks. So this can be a private sector bank and a public sector bank where these bonds are going to be issued. Anvish, I am not sure if it's going to be a zero coupon bond or a interest rate bond. That once the bonds are out, it will depend upon the political party. If it's going to be a zero coupon bond, you will not earn any interest rate. It will just ensure that the money that is coming to the political party is a more cleaner form of money that is coming to a a political party. So basically you purchase a bond and you give money for purchasing of that bond, and that money goes to the political parties for funding. Okay, so this essentially is a way of getting funding. The only thing is that government will have to amend the RBI Act, because till date only RBI was allowed to issue bonds. Now you have to allow banks to issue bonds. For that you will have to go to a specified bank. See guys, NHAI bonds are bonds that are issued by the Highway Authority of India, and these are bonds that are redeemable, which means whatever amount of money you've given, you at the end of the tenure of the bond, say 5 years, 10 years, you will get that money back. But an electoral bond is not going to be similar. An electoral bond is basically a way of you giving money to a political party. So essentially, will you get that money back? No. So it's not a redeemable bond, or a bond which will actually try and get you some money later on. What basically, the reason they have launched an electoral bond is to clean the way of funding a political party. So you want to clean the way a political party is getting funded, and if the people want to hide their identity, if they want to hide their, so see, if you directly go and make a check payment to a political party, so above 2,000 you cannot give cash. So if I want to give 50,000 donation to a political party, legally I have to do it via a check, and if I give a check, my identity is disclosed. So if at a corporate house I want to support a particular political party, but I don't want to disclose my identity, I can easily purchase these bonds. So if I purchase the bond, my identity is not disclosed. If I purchase the bond, my identity is not disclosed. Okay. So that is what this will do. And the second important major structural change that has been done is dismantling of Foreign Investment Promotion Board. Now this was essentially an investment body that decided your investments, that decided your foreign investments into the company, that decided your foreign investments into a country. So if you want to do an FDI, that was decided by an Foreign Investment Promotion Board. Now what the government has suggested is that they will do away with the regime where Foreign Investment Promotion Board would monitor the foreign investments in India, but they've said that soon they are going to have another body in place that is going to monitor the foreign investments in India. But who's going to be that body? How it is going to function? These details would be out soon. These are not yet out. Okay. And the last important structural change that they have done is that they've imposed a single cash transaction ceiling of 3 lakh. That rupees 3 lakh is the maximum single cash transaction that a person can do, and above that you are actually supposed to do it the digital way. So you cannot do a single cash transaction of more than 3 lakh, which means 3.5 lakh, 4 lakh ki single cash transactions would not be allowed in India, is what the government has done. So that's an important structural change. And now moving on to the 10 themes that were announced in the budget. Penalty is if you break a signal, what do you pay? Penalty. Penalty is a charge. It's a fine that is taken from you. If you break a signal, you pay an amount, and if you play it in a formal way, it's a penalty that you pay. Penalties are essentially what you pay for illegal doings. Okay. Now coming to the 10 themes. Now coming on to the 10 themes that are announced in the budget. Now that's the 10 important things are farmers, rural population, youth, the poor and the underprivileged, infrastructure, financial sector, digital economy, public service, prudent fiscal management, yes, domestic transaction, prudent fiscal management, tax administration. Now I will just quickly kind of highlight what all the government has done in each of these themes. So in farmers, you have a focus. Guys, I know there are some questions, but I'll give you an email ID to write to me, and you will get answers to all your questions. In the paucity of time, I actually need to cover a few more things, but I'll definitely give you my email ID to write to us, and you'll get answers to all your queries. So don't worry about that. Focus on what I'm trying to explain. Now coming on towards your farmers, so what the government is trying to do for the farmers. The main agenda is to double farmers' income in the next few years. So what they've done, they've increased the target for agricultural credit in 17-18. Now that has been fixed at a record highest level of 10 lakh crores. Okay. Secondly, 60 days interest waiver that was announced by our Prime Minister during his 31st December speech is gone through, which means that farmers will get the benefit of 60 days interest waiver loan that was announced. Thirdly, they've set up, so they're going to ensure a flow of credit to small farmers. Agricultural credit means the amount of money that you've lent for agricultural purposes. That's essentially called an agricultural credit. So if as NABARD I'm trying to give loan for agriculture purposes, it forms a part of agricultural credit. So to ensure a flow of credit to small farmers, and government is going to support NABARD, NABARD for computerization and integration of 63,000 functional primary agricultural credit societies and the core banking system of district central cooperative banks. Now these are basically essentially two entities via which government is trying to improve the flow of credit to small farmers. These are your primary agricultural credit societies that are essentially present in various districts that provide credit to small farmers, and then you're going to help develop a banking system for district central cooperative banks. So there are some district central cooperative banks that also essentially lend to small farmers. So okay, I'll repeat the third point. This is essentially what you're trying to do is increase the flow of credit to small farmers. Why? Because you've said that you want 10 lakh crore of agricultural credit, which means loan given for agricultural purposes to go to farmers so that they can improve their agricultural. You're saying that in order to ensure that this 10 lakh crore is gone through, I am going to use NABARD and use the primary agricultural credit society and develop the banking system for district central cooperative banks over the next 3 years at a cost of 1900 crores. So the government has set aside is 1900 crores. Okay, then what else? In farmers, they've set up a dairy processing and infrastructure development fund with a corpus of 2000 crores, and they've said that this will increase to 8000 crores over the next 3 years. And then you will set up a dedicated micro irrigation fund. What is micro irrigation? Micro irrigation is essentially ensuring that it's like more drop per crop. So you want to ensure yes, I will share the PPT. So you want to ensure that whatever water you are utilizing is ensured in the best way to the farmers, and that's why you want to focus on micro irrigation. And you companies that set up micro irrigation set up for plants. So per drop more crop is the focus of micro irrigation, and for that government has set aside 5000 crores. Okay, and then a long-term irrigation fund which has been set up by NABARD already. You want to increase the corpus of the fund to 40,000 crores. So why do you want to increase the corpus of the fund? What is the corpus of a fund? It means the amount of amount of the size of which the lending can be done. A corpus is the amount of money that a particular fund has to give away to the people. So that is what is the total corpus of the fund. Now, question for you. What is the initial corpus of fund decided for dairy processing and infrastructure development? Come on guys, answer. Come on. Yes, and it's 2000 crores. Expect your yes, so it's 2000 crores which will be increased to 8000 crores over 3 years duration. But initial corpus, so important point here, initial corpus. So you'll need to read your question properly as well. Initial corpus, which is 3,000 crore. And if they say that what is the total corpus they'll get over 3 years, then the amount is 8,000 crores, right? Okay. And what is the target for agricultural credit fixed for the year 17-18? And yes, so it's 10 lakh crore, as most of you all have got it right. Now try and answer. How is the government trying to ensure a smooth flow of credit to farmers in order to achieve this target? Two things, two important things they've done. Yes, so basically core banking system development of district central cooperative bank, and secondly you will have you will integrate your NABARD system with 63,000 primary agricultural credit societies. Okay, great. That now coming to the next important theme, that's called the rural population. Now, what has happened to the rural population? Your aim in rural population is that your aim is to bring 1 crore households out of poverty and make 50,000 gram panchayats poverty free by 2019. 2019 is the 150th birth anniversary of Gandhiji, and that is where the government has set a target for itself, which they are saying that they want to get 1 crore households out of poverty and 50,000 gram panchayats poverty free by 2019. Okay? Now, against the target, the second thing that they've done for the rural population is against the target of 5 lakh farm ponds under Manrega. It has been increased to 10 lakh farm ponds, which is going to be completed. Now, guys, what's the full form of Manrega and what exactly is Manrega? It's the Mahatma Gandhi National Rural Employment Guarantee Act. That is what Manrega is. What essentially Manrega talks about? Manrega talks about at least 100 days of employment in any rural part of the country, in which they are trying to say that the lowest salary that a person who is going to earn is going to be rupees 120 per day. So basically, through Manrega, you try and kind of ensure rural population that you will get at least 100 days of employment in any of the rural parts of the country. And as people sign up to Manrega, it's Mahatma Gandhi National Rural Employment Guarantee Act. I'll repeat the full form of Manrega. It's Mahatma Gandhi National Rural Employment Guarantee Act. So that is what Manrega essentially is about. And 17-18, they are targeting another 5 lakh farm ponds to be taken up. Another 5 lakh ponds to be taken up for development under Manrega. Why they do it under Manrega? Because it increases your employment opportunities. And another important part in Manrega that they've done is that they've increased the women participation to 55% from less than 48%, which was there earlier. So earlier you were around 48%. You've said that this year, yes, you can. They're calling it women participation, so I don't want to name it quota and this, but yes, they are trying to improve the participation of women that was less than 48% last year. They want to increase it to 55% this year. And secondly is the pace of construction of your Pradhan Mantri Gram Sadak Yojana. So PMJSY is Pradhan Mantri Gram Sadak Yojana, under which they kind of essentially understand what is the plan for building up sadak. So basically roads in rural areas. So essentially you're trying to accelerate to 133 kilometer of roads per day in 16-17, against what on an average you've achieved 73 kilometers during the last 3-4 years. So you want to increase that to 133 kilometers. Okay. Now what is there in it for the youths of India? For the youth of India, so for the youths of India, Innovation Fund for Secondary Education has proposed to encourage local innovation for ensuring universal access. So basically, you're going to have an innovation fund for secondary education where you want to promote more local innovation, gender parity, and quality improvement in educationally backward districts of India. So you'll set up an innovation fund. You will give money to these places where essentially these are educationally backward districts of India, and the figure is around 3,479 educationally backward districts of India. Why you're going to set up an innovation fund? Because you want these districts to essentially do some kind of innovation and have a self-learning platform for themselves on which you are willing to spend money. So you're going to set up an innovation fund for secondary education. The second thing for youth is the SWAYAM platform. What is SWAYAM, guys? Full form? Anyone? It's Study Web's Active Learning for Young Aspiring Minds. That is what SWAYAM is. SWAYAM is a platform that was developed by the HRD ministry in order to ensure a lot of MOOCs. What are MOOCs? Massive open online courses. So massive open online courses, these are free courses that are run. So even Harvard, London Business Schools, SWAYAM is Study Web's Active Learning for Young Aspiring Minds. Now this is Studies Web Active Learning for Young Aspiring Minds. This our HRD ministry has launched. They've launched in order to ensure that you have a lot of MOOCs available. MOOCs are massive open online courses. Now these courses currently are being run by a lot of universities, and yes, as Anvesh has highlighted a few of them. These are, so a lot of universities, even like Harvard, the London Business Schools, they run online courses for free, which essentially means you sign up for a course, learn everything on your own. The only difference is you don't get a degree, but you get to learn everything. So that is what a MOOCs is. And SWAYAM is essentially MOOCs that is being run by the HRD ministry. So they are intending to launch at least 350 online courses this year for students to virtually attend courses that is going to be taught by the best faculty. MOOCs are massive open online courses. That's the full form of MOOCs, Divya. Okay, then the next is Sankalp, which is Skill Acquisition and Knowledge Awareness for Livelihood Promotion Programs. Now this is going to be launched, and the estimated cost is 4,000 crores. And the agenda here is to give relevant training to 3.5 crore youths of India. So here you will provide them with skills, you will provide them with knowledge, and these are essentially going to be the basic livelihood knowledge about basic livelihood things. So you've set aside 4,000 crores for Sankalp because you want to provide training, and they intend to cover 3.5 crores youth population of India. In that, this will essentially help them improve employment as well, right? Now, you'll have to answer, what is the percentage increase in women participation in Manrega? 55%. From current, what was the current level? Current level, guys? Yes, less than 48%. Now, what is the full form of Sankalp? Come on. Not Google. Full form of Sankalp. It's Skill Acquisition and Knowledge Awareness for Livelihood Promotion Program. Skill Acquisition and Knowledge Awareness for Livelihood Promotion Program. Okay. Now, moving on to the next category, which is what they've done for poor and underprivileged. Ignore the spelling error, I'm sorry, underprivileged. So you have Mahila Shakti Kendra, which will be set up with an allocation of 500 crores in 14 lakh Anganwadi centers. So basically Anganwadis are nothing but centers that has been sent across, and these are going to be given allocation to basically become a Mahila Shakti Kendra. What is a Mahila Shakti Kendra? It's basically a one-stop conversion support services for empowering rural women with opportunities for skill development, employment, digital literacy, health and nutrition. Yes, it's a kind of a center which will boost, which is going to be a boost for women, because they want to empower rural women with opportunities of skill development, and digital literacies. So this is basically for boosting that. Your ICDs are basically, yes, integrated child development services. And now I have discussed affordable housing to be given an infrastructure status. I discussed it earlier in affordable housing. This will again benefit the poor and the uh, poor and underprivileged section of the society, because you're trying to improve the availability of households to them. And secondly is the allocation for scheduled caste. As a total, it has increased by 35%. Okay. Now moving to infrastructure, BE is budgeted estimates. Wherever I've used BE, it means this year's budgeted estimates. Okay. For infrastructure, what you've done for passenger safety, you have a Rashtriya Rail Sanraksha Kosh, which will provide, which will be created with a corpus of 1 lakh crore, and this will be over 5 years. So basically, you are saying a total corpus of 1 lakh crore for passenger safety is going to be set aside. Then you have railway lines. You're going to commission around 3,500 kilometers of railway lines in 17-18, and you're expecting at least 25 stations to be redeveloped in this year. And you're saying that 7,000 stations with solar power in medium term. In medium term is what they've proposed for infrastructure in railway. These are the important announcements for railways. And then the next important corpus basically means the total amount of fund that you will put. So over a period of 5 years, totally your Rashtriya Rail Sankarsh Kosh, that fund totally would have 1 lakh crore. Corpus essentially means the amount you can use to spend. That's a corpus. Okay. Then the next important thing that has been done is they've proposed to set up a strategic crude oil reserve at 2 more locations. So these 2 more locations are Chandni Khole in Odisha and Bikaner in Rajasthan. So the essential important thing you'll have to remember is that it will take our strategic reserve capacity to 50.33 MMT. Okay. Million metric tons before, so 15.33 MMT. Now by the end of 17-18, you want to have a high speed broadband connectivity on optical fiber. What is this? Basically, optical fibers are lines that ensure a high speed broadband to move from one place to another. So the government has intended that 1,50,000 gram panchayats would be covered under Bharat Net. So this program is being named as Bharat Net. A DigiGaon initiative will be launched to provide telemedicine, education and skills through digital technology. So these are all the focus on the digital areas that you are focusing on. Now, for you all to answer, name the initiative launched to ensure high-speed broadband connectivity on optical fiber across gram panchayat. And how many gram panchayats they are intending to cover? How many gram panchayat guys they are intending to cover? Yes, 1,50,000 gram panchayats. Now, what have they done for the financial sector? So, as I had earlier highlighted this as well, because it was one of the major change. Your Foreign Investment Promotion Board has been abolished. This means you're going to follow a more liberalization of your FDI policy is going to come soon. After an FIPB is removed, you will have another body that will govern foreign investment. What is going to be the role of that body, how that is going to be designed is something that is yet into consideration. The next important thing in financial sector is Indradhanush, wherein you've said bank recapitalization 10,000 crores. Guys, for you need to remember a 10,000 crore recapitalization for banks is way too less an amount. That is much more is needed to capitalize all the public sector banks which are into losses. So this is as a part of your Indradhanush which was launched. This is a similar Indradhanush program that is continuing, but under Indradhanush you promised recapitalization for banks, but this year you have you've just said 10,000 crores. What is recapitalization? Essentially, recapitalization is that banks need certain amount of capital. Banks need certain amount of capital to run businesses. Now, if you see, most of your public sector banks are faced with a lot of issues of NPAs. What are NPAs? NPAs are non-performing assets. These are bad loans for the bank. Now, because you have a lot of bad loans for the bank, they've kind of so your PSU banks are kind of losing money in writing off those loans, and if they essentially want to write off that entire loan, your capital is going to get eroded. Recapitalization is where government will put in more money as capital into public sector banks. So that's essentially what recapitalization is. According to estimates of various analysts and economists, your public sector banks in India need around 1 lakh crore of recapitalization. So that's the need of recapitalization that is needed. And what important thing else that has been done for the financial sector is basically listing of some of the central public sector enterprises, and important ones are the railways public sector enterprises, which is your IRCTC, IRFC, and ICON will be listed on stock exchanges. Guys, a question to you all: what does this listing mean for the government? What does listing of these companies mean for the government? IPO, dividends, more money. Exactly. It's basically an increase in money that you're trying to earn, and this money is essentially forms a part of your disinvestments. Exactly. Raghunath, you've got it right. It's your part of your disinvestments. Vishal, when we cover banking sector, when we cover banks and RBIs in detail, we will definitely be explaining your Indradhanush, how it came into existence, and what are the capitalization plan and what else are there in Indradhanush. Okay. So, Pratik, so you have had consistent listing being done by the government. So every year they try and see which company can they get listed. So it has always been a gradual process. You can't list all of them together because even you will have to manage so much of things. So it's a gradual process, and government has been doing a gradual process of getting some of the public sector companies listed. Now moving on to your digital economy. So your digital economy is 125 lakh people who've adopted BHIM app so far. So the government will launch 2 new schemes to promote the usage of BHIM app. Guys, you all know what's BHIM app? It's the BHIM app, guys. It's a Bharat interface for money. It's a mobile app that has been launched to promote. It has been launched to promote digital payments. It is using the unified payments interface, and it's an app which is essentially to ensure that you go the digital way and start using more digital transactions. It has been developed by the National Payments Corporation of India, and innovative thing by the government to boost to promote the usage of BHIM app. These are referral bonus for individual and cashback scheme for merchants. So if an individual refers, suppose let's say Vishal, you refer Anvesh to use the BHIM app, you will get a referral bonus for that. It is similar to the private sector kind of an Uber model, that if you give Uber, if you share your coupon code with someone else and that person uses the Uber ride, you get a cashback. Similar. So it's interesting to see government trying to follow this kinds of way to promote digital economy in India. So basically you're trying to boost the usage of BHIM app through referral bonus for individuals and cashbacks for merchants. So if you are a merchant and you are telling another merchant to use the BHIM app, you will get a cashback. That's an innovative way. Secondly, Aadhaar Pay, a merchant version of Aadhaar enabled payment system, will be launched shortly. That will be launched shortly. That's going to be called the Aadhaar Pay. Then you have a mission that will be set up with a yes, because your Aadhaar Pay for individuals are already there. So merchant version of Aadhaar enabled payment services would be launched soon. Then you have a mission will be set up with the target of 2,500 crore digital transactions for 17-18. That should happen through UPI, that is your Unified Payment Interface, IMPS, debit cards, Aadhaar Pay. Just remember 2,500 crore digital transactions are the target for the government. Now you have promoting affordable housing and real estate sector. So these are two more important changes because you need to understand how you're boosting affordable housing. So your reduction in holding period for computing long-term capital gains for transfer of immovable property has come down from 3 years to 2 years, which essentially means that if you had to file for a capital, if you wanted to get the benefit of long-term capital gain tax on any of the property you sold, earlier you needed to hold that property for 3 years. Okay. Now that has been brought down to 2 years, which means after 2 years it becomes the long-term capital, it comes under the long-term capital gain, and not the short-term capital gain. So if it comes under long-term capital gains, definitely the tax amount reduces. So it's a boost. And second and the most important change is the change in the base year for indexation, which has been proposed to be shifted from 81 to 2001 for all classes of assets, including immovable property. What this means? Which means earlier, let me take an example here to explain you all. If earlier you bought a property in say 1990 for rupees 1 lakh, and you sell it in 2017 for 10 lakh, your base prices, hold on, 10 lakh, you're saying your base prices would be on a base year. So if in 1998 your cost of property was 2 lakh, your capital gain would be 10 lakh minus 2 lakh. But now they are getting this to 2001. Okay, which means you are increasing the denominator for you're increasing the denominator on which basis you will calculate your capital gain tax. Okay. Okay, now name of the two schemes launched to promote usage of BHIM app, guys. Question for you all. Referral and cashback. And yes, this was referral and cashback. So this was essentially, okay, so this was essentially, I know there are a few questions, but since I'm giving you all an email ID, so you all could write us on this email ID to get your queries answered. The ID is newscanvas @ Yes, I'll do that, Aditya. Just give me a minute. Newscanvas. Okay. So basically, if you all have any queries, you all could relate this session. You all could write to us on newscanvas @ newscanvas.com. No, we do not have an app. You can just write to us. The PPT would be shared with you all, so don't worry about that. We'll share the PPT with you all. But for any queries which remain unanswered, you all need to write to us on newscanvas @ newscanvas.com. You all needed me to explain the last part, the base year of your indexation. So basically, indexation is something on which you you say that your indexed value for your capital gains is calculated. Earlier it was calculated from 1981 onwards, which means what was the value so basically the official value of that property. What is the official value of your property in 1981, and then you kind of try and analyze in 1981 and what is the present value. So if you sell it today, you minus your value that was there in 1981, whatever extra you are earning, becomes your capital gains. But now that has been shifted to 2001, which means 1981 the prices were way too less. Property prices were way too less. Now you say that now that has been gone down to 2001, which means at least the amount of deduction that you will get would be uh, higher, because they did not 1981 when prices of property were so low. Now prices of property had increased so much, so the capital gain tax that used to come to an individual who sold off his property was way too much. So that is the reason you said that we will change indexation to 2001, which means the value was 2001. Whatever property you have, whatever property you have prior to 2001, obviously you are selling it at that point, but your base year is being taken it as 2001. Anvesh, I know, but since it was a 2-hour session, we will have a continuation of the session in which we'll cover the remaining points. I know there are a lot of things that needs to be, that there are more things that need to be discussed, but since yes, Vishal, 2001 becomes a demarcated points which needs to be demarcated. But since we have a 2-hour session and we need to complete whatever we can in 2 hours, that's the reason we've covered some of the important aspects of it. There is a lot that we can discuss. Yes, we will definitely have another part in which you'll get more insights on the same. But we've tried and covered all the important aspects of this in this session. Now, can I also basically I would just want Ritesh to come in and talk to you all for just 2 more minutes, guys. He needs to tell you all something in 2 minutes. Ritesh?
Thank you, Mecca. So guys, how is the session?
Subin, yes, we will have a session on economic survey.
Oh, that's great. So thank you, Mecca, for the session. And we need to realize that it's very difficult to sum up the whole budget in 2 hours. So what you can do is you can share your queries and your questions with Mehka, and we'll try our best to get back to you and clarify your doubts on it.
Guys, we will have a session on... Sorry, Ritesh.
Yeah, Mecca. So we'll have a session on economic surveys that we'll have on 25th Feb. That's a Saturday next week. And there'll be a session on GST as well, but we haven't finalized the date yet. So it will be a little later, maybe in April, in March or April, and it will be an open session as well. For the other products, people who have subscribed to our RBI Grade B products, our phase 1 test series is already live. The first test was on 15th February. The phase 1 videos are available on your SIS login. There are other videos that are scheduled next week. There's a session on quant on Tuesday. Our test series for phase 2 will start. We are having an open mock at the end of March, and the test series will begin from April 4th. So the session plan and the future sessions, what you're going to have, we'll be going to share with you over your email, and will be available on your SIS as well. If you have any queries regarding the product, regarding the plan, I'll share my email ID with you. So you can write to me directly for any queries regarding the product. And for people who have not subscribed to any of our courses and who are attending the open session, you can get an idea about our products for RBI Grade B from this link. In case you have any queries, you can just mail it to us. Yeah, the reasoning videos and the general awareness videos the general awareness session will begin from tomorrow. There's the first session at 7 o'clock tomorrow. It's a live session, and people who have subscribed to our courses, they're welcome to attend. The PDF for the budget session, the PDFs will be shared with you of the PPTs. we'll try to make this session, there's a question that can these sessions be seen on demand? So we'll try to make it available on demand, and we'll share the link with you. Let me just talk to the tech team and get back to you on that. Yeah, so these sessions would be available on your SIS login. So the people who have missed the online session can log into the SIS and see the videos. And once you want to revise the budget session, because questions from the budget will be asked both in your phase 1, phase 2, and your interview as well. So you can revise the session from your SIS login. We'll make it available on your SIS login. So I think the time is up. And Mecca, would you like to share any more details from your
Guys,
end?
so you all can write to us on newscanvas@newscanvas.com for your queries, and for the students who are a part of CLRBI Grade B, you all are already receiving PDF from our end which has analysis. So budget was shared with you all. We will reshare the budget doc. So you would keep receiving such analysis from our end, which would be, on various general awareness topics. You will kind of find analysis of these topics on the PDFs that are being shared by us. These PDFs come to you via newscanvas@newscanvas.com. It is shared on your registered email ID. And in case you have any queries with respect to the PDF as well, you can keep writing to us on newscanvas@newscanvas.com to answer your old queries. And yes, these PDFs are not downloadable because it's an online content being made available to you, and it's restricted for access only to viewing by the people who subscribe to who subscribe with the Career Launchers RBI Grade B program. So yes, Lovanish, it's not downloadable. It's just would be viewable. Yes, so basically as soon as you subscribe, you would start receiving updates from our end, and old updates are shared as well. This session would also be available online in your SIS as a recorded session. Okay guys, thank you. Thank you so much. Hope you all enjoyed the session. You all could put in quick feedbacks of the session on the chat box. It would be amazing to hear from you all.